Welcome back. Right now is the peak home buying season, and the big question on prospective home buyers' minds, should I buy or rent? Mike Bush digs into a new Zillow report revealing why the break-even point for St. Louis is much higher than the national average.
Should I buy or rent? A new Zillow report might have the answer for you, but it depends on where you live and how long you stay. Let's dig into the numbers, but first, what does the break-even point even mean for you? It's how long would it take for your newly purchased home to become cheaper than renting? According to the Zillow's rent versus buy analysis, on average, on a national average, it takes about 6 years to break even. But digging into the numbers here in the metro, that number is much higher, closer to about 10 years. Looking at other comparable cities, the number is much lower, closer to 4 years in places like Columbus and Indianapolis, just to name a few. So if you are in the market to buy a home, if you plan on moving in a couple of years, it may make financial sense for you to rent. However, if your plan is to make this your home for around 10 years, buying could be the better deal for your wallet.
All right, as we just heard from Mike Bush, how long you plan to stay in a home can make a big difference in whether buying makes sense. But another major factor right now is mortgage rates and whether it's smart to wait for them to drop. So joining us now is Chelsea Murphy with Gershman Mortgage. Thank you so much. I know money is on the mind for a lot of people.
Absolutely.
And people definitely want to buy a home. But right now, with the way people's wallets are, it's a little nerve-wracking. So thank you for being here to kind of talk us through everything.
Of course.
A lot of people are hearing these higher rates and thinking that they should wait. Is that always the best move?
You know, there's a cost to waiting as well, Mercedes. So, you know, it's not always the right decision. I think it really matters for every person's unique situation. Everyone, you know, if they're going to move into a house and they know they're going to be there for just a couple of years, it might not make sense. But if they know they can stay in that home for the foreseeable future, there are positive factors in the St. Louis market.
What are some of those positive factors in our market?
The first one's affordability. So believe it or not, St. Louis metro area ranks top in the affordability factor. And so most median home prices are around $250. In the St. Louis area. Nationwide, it's closer to $400,000. So we actually do rank in the top as far as metro areas are concerned nationwide.
And you have mentioned that waiting can actually cost buyers. How is that the case? When would that play a part?
Yeah, you know, when you talk about what the cost of waiting is, one thing when I talk to home buyers and they say, hey, Chelsea, you know, I'm thinking about waiting until rates drop. Well, the one thing we have to look at is when rates do drop, the other thing that's going to happen is there's going to be more buyer demand. So when they go and they're waiting for rates to drop, more buyers are also doing the same thing. So you're going to get increased competition. What we saw during the pandemic, home buyers were actually unable to get things like home inspections. And
really?
Yeah. And so, you know, that's a big factor when you're moving into a house and there are costs to it. You want to make sure that you're buying the right house, but it's also a house that, you know, has that you've been able to get inspections.
Yeah, you don't want to have to put all that money into it after buying it if there's some problems. What are people missing when they do try to time the market?
When they try to time the market, the biggest thing that we see is, again, they may miss the opportunity on their dream home. And then they're going to be kicking themselves for many years down the road, again, trying to wait for that right opportunity. The other thing that they're missing is we are still seeing some appreciation, very steady appreciation across St. Louis market. So anywhere from 3 to 6%. That equity they're going to be missing out on year over year if they do decide to wait on the sidelines. But like I said, it's not a one-size-fits-all answer. Every home buyer has a unique situation, and what I really recommend is they look at their numbers, they understand where rates are at today, can they reasonably afford it today? And if they can, and they get lucky enough that rates do drop, because we don't know when and if that's going to happen, if it does, they can always refinance and drop those costs after they already acquire the home.
First-time home buyers. I know you mentioned affordability, but specifically being here in St. Louis, a pretty good place to be, right? If you're buying a home for the first time?
Yes, in St. Louis, we do have lots of first-time home buyer programs, and I talk about those a lot, and I really do work with a lot of first-time home buyers. Our goal at Gershman Mortgage is to educate our home buyer from really start to finish, so they're not going into it blind. And when we can educate them, they always say buying a house is one of the most stressful things you're going to do. But if you talk with a localized professional, they give you the right steps. You can really plan ahead, and it's not near as stressful as one might think it might be.
Yeah, I feel like that it's not something you want to do alone, right? You want to make sure you have experts in your corner. A lot of people watching right now, money is tight, inflation is really rough. They may think buying, in all honesty, just isn't possible. Why are more people closer to buying than they actually think if they look at their bank account?
Yeah, I think most people have not talked with their local lender professional. And I think that's really a big key because what someone might qualify for. They might feel like day-to-day or month-to-month money is tight. But you don't need a full 20% down. There are assistance programs out there. There are ways to offset the closing costs. People hear that there's, closing costs are so expensive. It's definitely a cost that we need to consider, but there are ways to get those items paid for through the transaction.
And you did just mention the 20% down payment. So how much does that misconception hold people back?
I think a lot. Obviously, there's some keys to putting 20% down. It's great if you can do it, but being a first-time home buyer, probably 99%, if not more, of my first-time home buyers never even think about putting 20% down. We've gotten a lot of home buyers to the closing table with less than $1,000.
Wow, I was going to say, what's the average percentage people are putting down? Or
Well,
just
average percentage-wise, you have to have anywhere between 3 and 3.5% as a first-time home buyer. But again, that 3 to 3.5% can be offset by seller credits, other credits, down payment assistance programs, and we have a lot of great options in the market.
And so just to wrap it all up, what is the first step people should take if they're thinking about buying right now?
Yes, I would say get in touch with a local mortgage lender. Everyone at Gershman Mortgage would be happy to help. You can go to gershman.com. There's a loan officers tab. You can connect with any local lender. I will be on there. I'd be happy to talk to any future home buyer that just is curious and have that conversation, figure out your numbers. And if the answer is, hey, it doesn't make sense today, we want to let people know that and then give them steps to achieving it down the road for sure.
I think talking to people is so important because you could just look at it yourself and be like, there's no way this is possible, but you could sit down with people and be like, yeah, it actually is.
A lot of times student loans comes up. Student loans feel very heavy and they think, I got to get these paid off first, but we really just have to look at what they're paying month to month from a debt standpoint. And like I said, more times than not, someone can be pre-approved, especially for that first time home buyer price. And start owning today with the longevity of building that equity. And there's no doubt real estate does create wealth.
Thank you so much. And thank you for explaining this. I know this is something that's on a lot of people's mind, and you explained it so easy, very digestible. So appreciate you coming on.